Hello everyone. This last video, I've been struggling with it because I'm deciding, I was deciding whether or not I should release a video like this because these are stuff that I follow, but I don't want everyone to think that you have to do these things. I was thinking about writing a post with like at least like 10 to 20 rules that I follow, but there shouldn't be a post like that because there's no reason why everyone should follow the way I trade. The way I trade, if you like it, hey, you can follow it, but there's no reason for me. There's no reason I should post that because there's not everyone trades like me, or not everyone agrees with me. Not everyone likes my valuations. Over the past couple of weeks, when things were dropping, all the speculative stocks, a lot of people were asking me like, why didn't I say something? Why didn't I do this? Okay, when everything is going straight up and everyone is making a ton of money, all you guys want are speculative stocks, okay? And when things are going down, no one wants the speculative stocks, they want the safe stocks. So even though I pulled out myself, I wasn't going to tell everyone stay away from Twilio or stay away from Spotify, or stay away from Snow because you're not the same investor as me. Okay, you want to make those gains. If Upstart keeps going to $500 and I tell you, hey, be careful, stay out of Upstart, UPST, and it goes up, you're gonna blame me and say, Nathan, what happened? Why did you say don't do Upstart? So a couple months ago, I backed away from a lot of the speculative stocks. And like I said, it doesn't make sense for me to tell people to back away because if the stock goes up, it's my fault. If it goes down, hey, it's not like I'm going to get anything from it, but I'm buying puts on a lot of those high flyers. So this is not like a real big history lesson, but this is like keeping it real because I'm one of the people that keeps it real. Okay, the stock market was starting in the 1800s. The reason why the stock market was started in the 1800s was not to make money on speculating and taking ownership of shares and selling it to someone else. The reason why the stock market was started was companies wanted money from people and not from the bank. They want to raise money by selling a piece of their ownership to a ton of people, accumulate all that money, and the idea was they would give you a small percentage of their profits once they make a profit. So the reason why I'm saying that is because that is why the stock market started. It was people wanted to raise cash by getting investors from all over the world. Now you have a lot of companies that are not making money and won't make money for a long, long time. Not for a long, long time. And the stock is still going through the roof. Okay? So remember, even me, I'm a small fry. We are all small fries on retail. Now, if we come together like an army, we're like a hedge fund. But it's been many, many months since Army combined together and decided to push something through the roof. The last that I can remember is IRNT, which is about 2 or 3 months ago, where everyone got together. Now, last week there were stocks, ISPC, that went through the roof because that's only 2 million shares available. So it wasn't required that a ton of people get in. A ton of people are needed to get in when the stock is big and there's a ton of shares. Okay, so that's the reason why people got in the stock market, to raise cash. So do not think that Robinhood is worth $20. Do not think that Snow is worth $375. So now I'm going to go over it with you. Remember, like I said, the whole point of the stock market when it started in the 1800s was to raise money from a whole bunch of people. And those people were expecting to get money back one day. But a lot of these stocks that I'm going to mention right now are high flyers that aren't making any money. And if they aren't making any money, what are they going to do? They're going to raise more shares and sell to you. If they don't do that right now, the stock market is still hot. So people are doing secondaries. They're selling more and more shares because you guys are allowing it. Why would they want to do a bond? A bond they have to pay back with real money. They don't want to do a bond. They want to sell into retail, which keeps increasing the price. So the reason why I didn't want to do this video is because it's going to be controversial, but it's going to be very, very real. And I'm sorry if I offend people. You know, I'm not on Reddit doing this on other subs, otherwise I'd get banned. YouTube, I haven't had any problem on YouTube, but on Reddit, on Twitter a little bit, when I say something bad about a company, boom, they go crazy. I'm going to pick like 3 stocks in my high flyers list, all right? This is my high flyers. It's hard to see it because the glare, but it's a high flyers list, so I'm going to do 3 in this list. But before I do that, I'm not going to keep going on AMC. So I'm going to go on Gamestop right now because Gamestop just announced losses, not earnings, losses. All right, they just announced losses this past week, and people are trying to spin their earnings as good. So I'm going to go into my phone, take a look at GameStop. GameStop has a current market cap of $12 billion. The stock is 160. Let me tell you, 10 years ago, when GameStop was like a monopoly and made money to give you cash, the stock was like $20 or $30. So why would a company that was making money 10 years ago, that had a monopoly, and the company was worth like $2 billion, why on earth is it worth $12 billion? Okay, sales are down. They had like $1.2 billion in sales, and it lost $106 million. Oh, some people are gonna say sales were up 30%. My friends, sales were up 30% from close to from 900 million to now like 1.1 billion or something like that, and they beat on sales. My friends, they lost 5 times more money on those sales. Think about that. They might as well have sold less, because if they would have sold less, maybe they would have lost less. Okay, if you have a store or you have a restaurant, okay, and you didn't even double sales, you did not double sales, but your losses went from 18 million to 100 million, is that good? It is good if you went 5 times in sales. Come on, GameStop people, come on, wake up, okay? If you're gonna complain on YouTube on me, fine. I'm just telling you the truth. Wake up. That is not a good report. You don't go from losing $18 million to losing $106 million and try to say that, ooh, sales are up 30%. Sales are up 30% and losses are up 500%. 500%. Okay, someone else tried to tell me that GameStop, ooh, they have a lot more inventory. That inventory is not paid for. Take a look at the 10Q. Take a look at the 10Q. They have a lot of payables. They have a lot of short-term debt for the inventory. And if sales are down, how are they going to sell that extra inventory? And they're losing more money now. They missed. Okay, now I'm going to go on to the next stock. I'm going to pick 3 stocks that are on my high flyers list, and just to go over it, just like I just did with GameStop. Okay, now I'm sorry, this is a popular one right now. There was someone on Ultimate Traders that talked about Draftkings. Okay, Draftkings. All right, Draftkings. Okay, Draftkings is also $12 billion. Okay, DraftKings is also $12 billion. Now, on the last earnings report, they lost $1.35. On the next earnings report, they're expected to lose 76 cents. So if they lost $1.35, all right, you take a look at how many shares outstanding they have. 400 million shares. That's 406, but let's say 400. Let's say 400 to make it easy. If they lost $1.35, okay, we're not all mathematicians here. So if they lost $1.35 per share and they have 400 million shares, it's easy to say that they lost over $500 million. Okay, this is a $12 billion company. A $12 billion company should not be losing $500 million in a quarter. And then you had the CEO come on CNBC and try to be bullish. Now, this is another way to easily attack it, just like I just did. But I'm going to take a look at the last earnings report. I'm going to see how much sales they had. Okay, because remember, they just lost $500 million. So if you lost $500 million, I'm looking for the earnings right now. I'm going on from my phone. I'm looking at the earnings right now. They had sales growth of 60% to 212 million. Okay, they had sales of 212 million and they lost 500 million. You tell me if that's good. All right, you tell me if that's good. I'm gonna look for something else here. I'm gonna take a look. Yeah, they lost $545 million. It's hard to see, but they lost $545 million on $200 million in sales. Why is the stock at $30? Why can't it be $20? When everything is going up and everyone is speculating, this thing could be $60. Why? Because Kathy Wood says this should be $60. Why else? Because there's people on Wall Street bets that say the same thing. But think about that, and I'm not spreading FUD. It's a $12 billion company that lost over $500 million the last 3 months. And they had $200 million in sales. Hello? Why can't this be $10? And if the market is bad, I don't even want it at $10. And if you take a look at their history, they've been selling shares. Insiders are selling shares. And remember, back when I said the whole point of this was to raise money from retail. What did they do? They dumped on retail. So if you're still buying and you're still bullish and saying it's going to go to 50, so what are you saying? That this is going to be a $15 billion company that just loses money? This has 60% growth, okay? My last play of the day on a Friday was Shift, SFT. They went from sales, and once again, this is not FUD. Nathan does not spread FUD, okay? So SFT went from sales of 60 million to 180 million. Growth 200%. A year ago, on the 60 million in sales, they lost 33 million, which is bad because it's half of sales. DraftKings lost double what their sales were, but we're going to SFT so you can see what is good. SFT lost $32 million on 60 million in sales. Now they increased sales from 60 million to 180 million and lost 43. Remember Gamestop? They lost 5 times more and only increased sales by 30%, but they lost 5 times more. SFT They lost 30% more, but increased sales by 200%. Once again, that is not FUD. That is facts. So DraftKings has won. Now let's go over another so you can see what's ridiculous. Okay? Let's go over Roblox. All right? Because I'm buying puts daily on this thing. Okay? So Roblox right now is $116 a share. Right now it's $67 billion. Microsoft bought Minecraft in 2014 for $2.5 billion. This is $67 billion. In 2014, Minecraft had more in sales than Roblox. Okay, I don't know if they were losing as much money as Roblox, but they had more in sales. Now let's go into it so that you could see what is ridiculous. Okay, because I'm trying to tell you guys so you can spot ridiculous. Okay, so I'm going to look. So they have almost 600 million shares available. Let's take a look at the last earnings. Okay, they lost 13 cents a share on November 8th. So let me look at November 8th. This is the second company. I'm trying to go over ridiculousness. Taking a look right now. I'm doing it live with you guys so that you guys can see this also if you guys decide to do it. So sales were 500 million. Okay, which is not bad, and sales grew by 100%, which I like. But what is the likelihood that this money is this company is gonna return money to investors? Now I'm trying to look right now the overall losses because they had sales of 509 million, but let me see the overall losses because when they say EPS, you don't really get an idea of what's going on. All right, you have to look for how much they lost. So 500. So they lost $74 million on 509 million in sales. So what you would do, you would try to track the previous history, and you would note that this company does not have over $1 billion in sales. So right now it's trading at 70 times sales, 70 times what they sell in a year. Not what they make, because they're losing money. They're going to lose money for 2022. They're going to lose money. They're losing money now. They're losing money next year. And it's trading at 70 times sales. So Jim Chanos was against DraftKings. He hasn't seen Roblox. Okay, and we're going to check one last one. Bill came crashing from 350 a share to 250 a share. Why can't it be cheaper? Right now, it's a $26 billion company. Now, this I don't have to look up because this I know. Expected for 2022, for next year, 2022, they're supposed to have around 500 million in sales and lose $100 million in sales. $100 million on those 500 million in sales. Now, all this doesn't sound... it's just numbers. You're not making sense out of it because you're not relating it to an incredible company. Now, let me go at Zim. So once you see this crap, these are all crap. Let me go to Zim. Zim, they are demolishing earnings, okay? This company is $6 billion. Zim is $6 billion. Okay, and I'm just going to tell you how much they made the last quarter, just the last 3 months, just the last 3 months, because then you're going to see what a real company is. Roblox, Gamestop, AMC, DraftKings, Snow, garbage. The only reason it's going up because some other dummy perceives that it has a value. If a company does not make money, they cannot pay you, and you could never get money. The only reason you are making it money, you are selling it to another sucker that thinks it's worth more than what you're paying. But let's go into Zim. All right? We're going to go into Zim. So you're going to see what a real company is. So Zim made $2 billion last quarter. The whole company is worth $6 billion. So they made in profit $2 billion. The company is worth $6. They're expecting sales of $6 billion. So what they're having in sales is what the whole market cap is worth. So I wanted to go over 3 companies. Now we went over one company that was good. And now I'm going to tell you how I trade. When the market is very green, and we're speculating, because I speculate too. I like if a company is growing, even if they're losing money, but growing at 100%, and the whole market is green, I might trade it. I might speculate. I might trade it. Good. The company's growing over 100%. If it can grow over 100% year over year, it's going to make money. It's going to make money like Tiger. Like Tiger, right? TIGR is getting crushed. But they went from sales a few years ago of 100 million for the whole year to this year, 2021, 250 million. And next year, they're going to have sales of near 500 million. I'm telling you here. And with that 500 million in sales, they're going to make 50 cents a share. 50 cents a share, and the stock is trading at like $6 and growing at 100%. So if a company is growing at 100% and has a P ratio of 10, then you want to buy it. So we're going to go back into what I like to buy. So if I'm speculating and things are going up and it's going crazy up, normally I do not pay over 60 times what a company makes. All right. So we're going to make it easy and say Roblox, because Roblox has 600 million shares and 60 billion, right? Roblox is actually 70, but let's just say it's $60 billion. So if a company is trading at $60 billion, because you have to multiply the stock price to how many shares they have outstanding. So if it's trading at $60 billion, that means to me, they need to make at least $1 billion. If they don't even make $1 billion, all you are doing are speculating. If your company is going to lose money this year, is going to lose money next year, is going to lose money in 2023, 24, why are you buying it now? Why can't it go lower? The only thing from stopping a stock going lower is other retail or big money coming in, or some big kahuna deciding to buy out the whole company. If no one wants to buy out your garbage, your whole entire company, and other retail sees that this company is not going to be profitable for the next few years, so they can never pay you, why is it not going to go down? I would love to have this conversation with Kathy Wood, but I'm a nobody because she has a ton of stocks that will not make money for years. If the company does not make money for years, there is nothing to prevent the stock from going down if we're in a bad market. I get it. If we're in a bull market, everything is green. Everyone wants to make money. They don't care about sales. They don't care about earnings. They care about publicity because this is a popularity contest. But when speculation is down, that's what you don't want to have. So you don't want to have Draftkings. You don't want to have Roblox. You don't want to have snow or Bill. So like I said, this video is going to be a little controversial because there are a lot of people that are in these speculative stocks. I'm just trying to make you guys aware. I'm trying to give you guys an idea of what I look for if I want to speculate. SFT is speculative. They're not making money yet. Zim is a money-making cash machine. So is TX. So is ZEUS, Zeus. So is Tupperware, TUP. SFT is speculative, but there's a reason to speculate. Because if they keep doing sales at this pace, if the stock is low, a big giant would buy it. Now, before I go, I'm going to give you an example right here of the SFT because there are people down. There are people asking me what they should do with SFT. I don't have shares. I have calls, but I have calls that expire in April. There's a company, Lithium Motors, symbol LAD. All right, this is not FUD. You could look it up. LAD is constantly buying dealerships. LAD sells used cars, some new, mainly used cars, okay? But they're actually a physical brick and mortar and they buy real retail dealerships, okay? So let's say a company like Lithium Motors, all right, loses sales to SFT customers. People keep going online through SFT and buying used cars. SFT, LAD is like a $15 billion. Let me see, because I'm not sure, but I love LAD. LAD is a cash machine and makes a lot of money. Lithium Motors. So Lithium Motors is a $9 billion company. It's a cash generating machine. Okay? They don't have growth. They do growth by buying other dealerships. Okay? Now they want growth. Now that's when they do acquisitions. Okay? SFT right now, because you have to look at market cap. Like I have a general, Sparky. Sparky is a great guy. He hates water because he was down on water, but there was a reason to speculate on Wader because Wader's market cap is so low it can be bought out. Wader's market cap is 130 million compared to Dash, which is 70 billion. It's a little nickel in a bucket if they want to buy this company. But we're gonna go with SFT because I'm not even sure the market cap. It's going down a lot. So the market cap on SFT is 320 million. And they had growth, and it's no FUD, of 200%. So if LAD does not grow sales, they make their money acquisitions, and they see a small $300 million company when they're buying dealerships that aren't growing, what do you think they're going to buy? Eventually, if they start losing and they hear of SFT, they are buying SFT. And SFT, if you're a shareholder, you're going to be happy. And LAD, you're going to be happy too. Why? Because you're paying so cheap for growth. Where else are you going to get 200% growth? You're not going to get 200% growth in Carvana, which is the market leader. You will not get it in Room. You will not get it in Lots, but Lots is going at 100%. So that's just an example. Once again, this was a controversial video because I know people are in some of these high flyers. So, I mean, I'm a little sorry to attack your high flyers, but I want you guys to realize the risks, all right? Right now, we're in a market that might correct. And you gotta understand the risk that if you stay in these stocks that aren't going to make any money, they're not going to pay you any money. And the only reason it's going to go up because other retail thinks it's going to go up, or because Kathy Wood keeps saying, this is the future, this is the future. Can it be? It can. Yes, it can be. But we don't know what's going to happen 2-3 years from now. I'm not even sure what's going to happen 1 or 2 quarters from now. Okay, so how is someone, and I'm definitely, Kathy Wood, actually any of those money managers should contact me. That's how I feel. Anyway, have a great night. Hopefully this video helps a lot of you guys, because I still get a lot of people asking me, why is this a grenade? This is not a grenade. This is a real company. Like this past week, I had someone post about Draftkings. At least maybe they didn't post. They put comments like 4 or 5 times in Draftkings. Draftkings is only going to work in up market. Okay, it's no offense to you, but take a look at the numbers. Why is it going to go up? DraftKings, even if it's $5, I'm not touching DraftKings unless we're starting to go green. It's speculative even at $5, because even at $5, it's 12 billion. So it's still a multi-billion-dollar company with no profits in sight. All right, so good luck.